It's about that time of day again. My name is Joseph. It's Wednesday evening, January 25th, 2017. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude oil is bearish, rotating back to the high of a channel this evening, where we have multiple levels of resistance for the sellers to look for trading opportunities with a target going back to the low. The E-mini S&P is bullish, trading with a big wedge tonight on the way to completing a measured move tomorrow. Gold is bearish and trading at the 1200 round number this evening and appears to be developing into a trading range going into tomorrow's session. Euro is trading sideways instead of a triangle or a range this evening, which tells the bears to sell the highs, the bulls to buy the lows, and both sides to avoid the middle tomorrow. FDAX is bullish after another strong run higher today, which leaves the bulls looking for opportunities to buy low at support levels tomorrow. Boy, another big movement day today. Lots of great opportunities from last night's newsletter. And of course, I got a great plan for you guys in tonight's newsletter. Before we jump into our charts, though, and put that plan together for tomorrow, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link and come watch the full-length version of this video on our blog at Sideways Markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this newsletter video goes live. Follow me on social media. I'm always posting important updates, charts, and content throughout the day. Below the video tonight, don't forget you can download those charts in tonight's video, have those charts from tonight's video on your computer for tomorrow's trading session. And of course, we can't forget about the free pass. Upper right-hand corner, don't forget you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. Grab that free pass in the upper right-hand corner if you're not a member yet here at School of Trade. If you're brand new here to the SOT community, don't forget we got a great frequently asked questions page on our blog, and I'm always standing by to answer all your questions, right, 24/7. Use that live support tool on the right-hand side of the website. Boy, what a great week we've had. Had a fantastic inventory session today with all of our students in the trade room. Hope you guys are having a great week out there so far. Let's get ready for tomorrow. Tomorrow's Thursday, January the 26th. Of course, we're going into later in the week. We talked about this earlier, right? We got all the big news weighted towards right at the end of this week here. So we're finally starting to get into the meat and potatoes here of those big economic news reports. Tonight, nothing really major coming out of the Asian session overnight. I'm not going to worry about anything right coming out overnight. We go down to 4:30 tomorrow morning. We're going to see that fourth quarter GDP from our good friends in Great Britain. That'll be the headline news number tomorrow morning in the London session. If you're with me tomorrow morning in the trade room, we open up, of course, at 8 o'clock Eastern time. Scroll down a little bit here for us. We've got the international goods and jobless claims at 8:30. I think the big news of tomorrow morning session, though, is going to be that 10 o'clock new home sales number. I wouldn't worry too much about the jobless claims report and the international trade at 8:30, but that new home sales number will definitely be a big headline number, right, for a leading indicator for the U.S. economy here. So tomorrow morning, again, 4:30 a.m., you'll see that fourth quarter GDP, right, from last year. That'll be a big number, right, for the London-based traders at 4:30 a.m. We got some, again, it's supposed to be big news, but, jobless claims hasn't been a market mover for a few years now. So I'm not going to worry about that too much tomorrow, but I will definitely be watching that 10 o'clock reaction, right, to that new home sales at 10 a.m. And then, of course, don't forget, big news coming out on Friday. Friday is a very, very big day for news. We're going to see the durable goods orders and, of course, that fourth quarter GDP from 2016. We'll hear about that on Friday morning. We'll talk more about that tomorrow, though. Just be aware, tomorrow, late in the day tomorrow, we may start seeing some volume drop right ahead of that big news coming out on Friday morning. We got 4:30 a.m., 8:30 a.m., and 10 a.m. news tomorrow. Mark your calendar. Be ready for it. And don't forget, we'll be doing all this together, right, tomorrow morning in our trade room with all of our students. Let's jump right in. We got crude, S&P, gold, euro, FDAX. Let's get this thing started. Crude is bearish and rotating back to the high of a channel this evening where we have multiple levels of resistance for the sellers to look for trading opportunities with a target going back down to that low. The goal for the bears is to use the top of the channel, the measured move, and the reversal line resistance levels overhead and make sure to avoid selling low around that rising support trend line tomorrow. Anytime we have rising support trend lines in the charts, we always keep an eye on a possible reversal, which would require strength and a successful breakout pullback above the battle zone tomorrow for a move going back up to retest today's highs. It was a kind of a rocky, or maybe not a rocky, but definitely a wild session here. Of course, this morning we opened up and we were nothing but bearish bearish into that inventory report. We focused on selling, right, the high of that trading range. So of course, bear channel down, right, or bear trend down into that range, and it was just all about selling the highs for most of the U.S. morning session, right? The inventory number comes out. The buyers, of course, get a big push higher. They're unable to retest that high, right? And of course, the bottom falls out of it. Now we have that falling resistance. Take that, copy and paste down to that low, and of course, you can see a little tiny overshoot of that channel. So we'll look for an overshoot on the opposite direction, and of course you can see here we blew right through, right, that measured move, and now possibly going to use that measured move as resistance for a triple measured move, which of course is still pending. Don't forget that first leg down, right, that first leg down, that will be the projection now for where that triple measured move is going to be, depending on how far, right, this pullback happens to go higher here. So the triple measured move is a little bit to be determined at this point. We'll know more once we get more details as far as when this thing wants to make the turn. I think the big variable, though, right now for tomorrow is this rising support trend line. Whenever we see a rising support trend line, it tells us that sellers are going to be weary of selling into that support level, and that usually results in price going a little bit higher, right, than it normally would, right? Enough to attract more sellers and enough to give the sellers open space to sell that market back down. Now, with that said, that also leaves the window wide open for the buyers. If we can get a strong move up, hold above that battle zone, then we can start looking at this as a bull market tomorrow. Right now, the big news, right now, the big important thing right now is how far do we have to go up, right, to get far enough away from this rising support trend line, right, to attract enough sellers in and give them enough incentive, right, enough profit potential to sell this price back down. I've got my eye on the battle zone here tonight, but really this could be a little bit higher than this as well. But bottom line is I want to use the top of this channel. I love to use what I call naked reversal lines, right, up there at 53.03. And of course, right, we'll call this the overall battle zone here right now. Looking for pullback setups. Looking for pullback setups here off the high of that channel. If we happen to go up a little bit higher there, we'll look for that failure and back down. Right, if it goes a little bit higher, let's go a little bit further down there. There we go. Right, if we correct a little bit higher here, right, if we correct a little bit higher, look for that break, right, back below, and then look to sell those pullbacks back down, right? So obviously here, trying to sell the high of that channel, right, pullback set up off the high of that channel. If it goes above the, right, little trap high, failure and back down. Okay, if it corrects even higher, then obviously this is where the buyers can take control, right? If we see the buyers able to hold above that battle zone, then they can take control and go running for that high, right? But if they fail, we'll expect this price now to find its way, right, coming back down. Again, that variable is that trend line right now. That also tells me that if this thing does just roll right over here, we don't want to sell low. So as I always remind you, if we roll over, right, and we don't get that deep pullback, stay focused on finding that range, right, and get that price up and then back down. Again, the hard part's going to be that trend line's not going to have those sellers interested unless they can get that price up, so they can at least sell it with enough profit incentive, right, on the way back down. Be very careful selling low. Be very careful selling low. We get that pending measured move, the no trade down, the no trade zone down there. It'll have to really, really you want to sell up at these highs and then get through all this mess, right, and then continue selling from there. I'll have to wait and see if we get that confirmation through that no trade zone tomorrow. But as of right now, though, the plan is pretty simple, right? Get to selling high. And that rising trend line may give those buyers, right, the little bit of space they need, right, to take control of this market above the battle zone. Let's grab some E-mini. Boy, the equity index is here just on a tear this week. There is a very lofty feeling in this market right now. It's pretty easy to see there are some big changes coming in the landscape of our government here in the U.S., talking about removing regulations, right, talking about boosting the economy, and you can tell that the market, right, is drinking on the Kool-Aid right now, right, 110%, right. This market was a very bullish market the last couple of days. literally no pullbacks, right? There literally have been no pullbacks. So of course, in situations like this, the buyers are trying to gobble up anything they can get their hands on. This market, the S&P, looks relatively calm. The FDAX just jumped today, didn't even test the moving average, right, on these anchor charts. So we're definitely looking bullish, that's for sure, and trading now this evening with a wedge tonight on the way to completing a measured move. The bulls had another strong run higher today, and like all trends, we'll be looking for buying opportunities down at support levels and look for targets up at the measured move and the completion of that wedge tomorrow. Anything that pulls back right now will likely be considered a buying opportunity, so sellers need to stay patient and avoid the temptation to call a top on this market until they see sustained strength to the downside. You know, the most important thing about a bull market like this is you cannot start thinking it can't keep going higher, because trying to call a top, you know, very easy to try to call a top here, you're stopped out. Try to call a top here, you're stopped out. Right? You'll die a death of 1,000 little paper cuts, right? Trying to call a top in this market right now. Most important thing here is we got that bull spike in channel, and of course that bull spike in channel, they get a beautiful pullback, and of course with any time you see a real strong move in one direction, you know buyers are waiting there at that moving average, right, to buy this thing back up. So they of course buy it up. We got one leg and then two legs, right? That second leg now gives them that measured move at 97 even, right? 22.97 even. Now with that said, we know that of course with that measured move, we don't want to buy high right now. We don't want to buy high. We have the measured move there as resistance. We have this wedge target as resistance, right? These will be multiple levels of resistance, and you want to give it a good buffer zone. Make sure you're not buying into the measured move, right, and buying into that wedge. Really the ideal scenario for the buyers here this evening is going to be to look for price to pull back either to the top of the battle zone, right? Obviously these swing levels here, all of these areas, right, would be wonderful opportunities here for the buyers. Again, this thing hasn't pulled back very far in the last 2 days, so anything that pulls back right now is likely going to be seen as a buying opportunity. You're also probably going to get some counter trend traders entering into the market. So as this market really pulls back, there's going to be some sellers here who are trying to call the reversal, and of course we'll look for those reversals, right, to fail and then grab those moves on the way back up to retest the high. So of course the kind of the short-term example here would be below the moving average, right, failure and back up, right? Or you have more of a longer-term pullback example, right? This is where the buyers do actually get some distance here, and then of course break out, pull back on the way back up. Again, what you really want to be careful about is waiting for strength to the downside, right? What'll usually happen in a real strong market like this is you'll usually see this, right? Buyers explosive buyers, it pulls back, it kind of grinds lower, right? This kind of grinding lower, and then eventually it comes in enough to attract more buyers. We get back above the moving average, it explodes higher, right? And then of course we can be buying that, right, on the way back up to retest that high, right? So it's that kind of grinding below that moving average. Now, if you go back here a little bit here, nope. If this thing takes off now, right, if we happen to just eventually take, literally almost as if there's a tug of war match going on, right, and the buyers kind of let go of the rope. What happens if you're in a tug of war match and I'm one side's the buyers, one side's the sellers, right? Buyers, of course, if they let go of the rope, what's going to happen? The sellers will launch in the opposite direction. So if we see that real strong move, right? Buyers explode higher. It's grinding, and then all of a sudden, bam, right? We get that real strong move lower. That move lower, that's the strength that I'm talking about. Right? Just because we get back below the moving average in a bull market doesn't mean we should be selling. Okay, and especially in a market like this. Beware of that kind of grinding lower. If you see the snap, right? You see the buyers let go of the rope. If it feels like the rug was pulled out from underneath them, that's when you know, okay, now we have a chance here now, right, to grab this thing, hold that pullback, and then if they can hold that pullback, then you know we get a bear market in our hands. Because remember, just a big dip. We oftentimes will see stuff like this, right? It dips, they try to sell it, and it still comes back up, right? So you got to wait for that pullback to hold after some continued strength. I know it's not easy. But the key word for sellers right now is patience.